Hey, it's Nick here, and you're on the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. The pair that I will be breaking down into this video is Euro USD, which is one of the most traded pairs in the market, actually the most traded pair in the market. And as usual, I will be keeping this breakdown as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what the biggest speculators in the market are doing, so hedge funds. And we will be checking the data for the euro. And keep in mind that if you check the data for the euro, you're actually checking Euro USD because all currencies on the spot are traded against the USD. So if you check the data for the euro, you're actually already checking Euro USD. And by using the combination of our technicals and order flow, we will be able to understand where we can be looking for the best probabilities for Euro USD. So starting here from the monthly time frame, what we have is a market which has just provided a nice impulse to the upside, followed by this correction. Now, generally speaking, after an impulse and a correction, what you expect is for the market to provide the continuation to the upside, which is in fact exactly what the market did. The market has just completed this impulse correction and impulse pattern to the upside. However, there is one very important thing to notice. After a market creates a higher high, the market has actually broken above a previous high, and that previous high is a previous resistance area, which, now that the market has broken it to the upside, is turned support. So here what we have on the monthly for Euro USD is a market which has previous resistance now turned support here, which we can expect the market to retest to grab some liquidity before creating the continuation to the upside. So on the monthly, we are testing previous resistance, turn support, and we do expect the market to provide a rejection to the upside, possibly for the creation of a higher high. Another thing that we must notice here on the monthly time frame is that after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of the impulse, what we can see is that we have a perfect 50% retracement lining up perfectly with the previous resistance turn support, creating a confluence of support exactly inside of this area to which we can expect the market to provide a retracement to before creating the continuation to the upside. So on the monthly, we expect a short-term move to the downside before a rejection to the upside. Let's go down on the weekly time frame and see what we have from a weekly perspective. Now here on the weekly time frame, we have a completely different scenario. In fact, here in the weekly, we can see that we had previous weekly resistance, which the market broke to the upside. At that point, it was turned support, and then the market broke again below the area, and at that point, you have previous support, which is now turned resistance here. And after the market retests a level of previous support turn resistance, you do expect the market to reject it to the downside. And in fact, that is exactly what the market is currently doing. The market in this current week that we are trading in is rejecting this resistance to the downside. And we can see that at the moment, the weekly candle that we are trading in is actually bearish. So on the weekly, we have resistance and we expect a move to the downside, which is exactly what we had already seen from a monthly perspective. Going down on the daily time frame, what do we have? Now on the daily, I had spoken about Euro USD quite a few times in the past. I spoke about Euro USD after the creation of this overextended W formation. I made a full breakdown of Euro USD when the market was here, explaining all the reasons for which from here, we expected the market to create this move to the downside. And in fact, that is exactly what the market did. Then from here, we wanted to see the market create this continuation to the upside, and that is what the market did. And after the creation of this overextended W formation here, when the market was at this level, I made another breakdown explaining all the reasons for which from here, we expected the market to create this move to the downside. And again, that is exactly what the market did. Then we had the creation of this M pattern. And after an M pattern, generally speaking, you want to see the market create a move to the upside to go and complete the pattern at the previous support. now turn resistance. And I made another breakdown of Euro USD when the market was here, explaining all the reasons for which from here we expected the market to create this move to the upside. And in fact, that is exactly what the market did. Then we had this impulse, and when the market was here, I explained all the reasons for which first we expected a retracement and then a continuation to the downside. And at the moment, the market is ranging inside of our reversal zone from which we still expect the market to create this move to the downside. And by the way, I will link in description all this previous analysis. So you will find linked in description all this previous analysis so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, at the moment, what do we have on the daily and how we can be looking for the next potential opportunity for Euro USD? Now, before I show you that, let's first go and see what we have from a COT perspective, so commitment of traders perspective, which is what hedge funds are doing in the market. Now, on the euro, what we can see is that with the last report, we went from having 133.9k in net positions all the way up to having 163k net positions, with 7.7k long positions added with the last report and only 200 shorts. Currently, we are counting 236k long positions and only 73k shorts, so the euro is actually getting quite strong. However, we already know from a monthly perspective this move to the downside is only a short-term retracement before a possible rejection. So we can still easily expect the market to create the move to the downside before creating the rejection to the upside. Plus, we have a lot of liquidity that is below these lows, because below these lows, many people will start shorting, and there are also many stop losses below these lows here. So if the market will reach this area, market makers will have the possibility to add even more long positions before the monthly rejection. So it would be great to see the market create this move to the downside. So how we will be approaching this kind of opportunity and situation with students. Now, if the market will create a move to the downside from here, we will create an M formation, which could easily become an overextended M formation, which is as well a bullish pattern. So if the market will create a move to the downside, we expect the market to create a move back up to complete the pattern at least at the previous support, now turn resistance, from a daily perspective. So the way in which we will be approaching this with students is as usual being reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So with students, what we will be doing is monitoring price action from a 4-hour perspective during this move to the downside. And what we will be waiting for is for the market to shift from a 4-hour bearish market, as we will have, to a 4-hour bullish market. And as soon as the market will shift from a 4-hour bearish to a 4-hour bullish market, at that point, we will be adding Euro USD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this overextended M formation at the neckline, which is the previous support, now turned resistance. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.